Financial Analysis Presentation Assignment, Mackenzie Holman. The company I chose is General Dynamics Incorporation. General Dynamics characterizes themselves as a company who promotes transparency, trust, alignment, and honesty. As a monopolizing enterprise in the aerospace genre, General Dynamics has become a multi-billion-dollar organization, incurring an annual revenue of roughly $47.7 billion. General Dynamics provides products and services such as business aviation, combat vehicles, weapon system, munitions, IT solutions, and shipbuilding, just to name a few. General Dynamics' customer base is aimed heavily towards military and national defense programs, and the company relies heavily on contracts from the United States government. In 2024, the U.S. military and defense spending budget was increased. This increase in military spending will significantly influence the revenue and production of the company in the near future. Lastly, General Dynamics' main competitors are Northrop Grumman, Transdigm, Textron, RTX, HEICO, and Boeing. Through the creation and analysis of General Dynamics income statements from the past 3 years, as well as predictions for the next 3 years, it is apparent that their presence as an aerospace defense conglomerate has and will prove successful in the years to come. Starting from the right side of the chart, we see where General Dynamics was 3 years ago to where its revenue is in the most recent. Looking at their most recent statistics, the core status that General Dynamics has in national defense is relative to their comprehensive income, which saw an increase in the past 3 years. General Dynamics income statements not only represent the operational activities and the trends found in its revenue, but it is informative to the investors of General Dynamics. This increase in revenue represents General Dynamics' positive reflection of income of their quality of earnings, given that said revenue has seen a positive increase in the past 3 years. Thus, by piecing together historical and projected statements, it is apparent that there is a positive trend, as indicated by the result, which was seen in this Excel. This chart came from the Excel spreadsheet. Moving on to cash flows, General Dynamics' long-term profitability has fluctuated around the year 2020. This was due to the COVID-19 pandemic. Therefore, observing the three areas of General Dynamics' visual activities requires understanding their prevalence in its statement analysis. An empirical study called The Impact of Changes in the Element of Cash Flow Statements describes operating, investing, and financing activities as having a positive impact on stock returns. Given these activities, they describe the strengths and the profitability in the future of General Dynamics. From this chart, you can visualize 3 years of data being present year being on the left to 3 years ago on the right. There is substantial growth in the net income within the documented operating activities, and investing activities are increasing as well. Financing activities increased from 2021 to 2022, and they gradually increased for the next year. It is important to visualize these trends cohesively with that of the net balance sheet and net income, while recognizing how global economic shifts like the COVID-19 pandemic affected the market for even seemingly unrelated businesses. Understanding ratios is important when finalizing insights into profitability, liquidity, operational efficiency, and solvency. Beginning with liquidity, the ideal good ratio is anything higher than a value of 1. A value over 1 shows financial security. General Dynamics currently has a ratio of 0.82, which is lower than the sector average. It is important to mention these statistics are also lower than their top competitors. Northrop Grumman currently has a quick ratio of 0.91, and Transdigm tops both of them with a quick ratio of 1.85. Opposite to liquidity, leverage ratios are optimal when less than a value of 1. An area in which General Dynamics has proved mostly successful is in their ability to recompense their fiscal responsibilities. In comparison to their competitor ratio analysis, there is evident congruence of successful debt and equity management. Likewise, General Dynamics activity ratios, in addition to Northrop Grumman's activity ratios, are adequately stated as an effective means of efficient operational strategies and resourcefulness of assets and revenue, given that certain ratios of a higher official amount are exemplary of their good credit. Profitability, on the other hand, is most susceptible to competition regardless of its upward success. General Dynamics' diverse customer base provides it an opportunity to generate revenues from different sources. Yet $8.1 billion of its revenue come from the United States government, thereby exposing it to substantial risks if there are any fallen orders or the budget for national defense drops. However, increases in the national defense budget, as well as ex-President Obama's $8.1 billion proposal for submarines, is sure to help General Dynamics, seeing that they are only one of two contractors in the entire world equipped to build nuclear-powered submarines. The company's aerospace segment also continues to witness strong improvement. The efficiency and market value of General Dynamics to stay vigilant within these areas have been greatly successful, which have been noticed in both graphs displayed. However, there is a strong competition and the possibility of a shifting economy. Therefore, it is important for General Dynamics to remain vigilant, given that other large conglomerates such as Northrop Grumman and Transdigm are major sources of competition in their past, present, and future. When looking at the unaudited revenue and operating earnings by segment, you can see the breakdown of operations. Though General Dynamics has four main segments, aerospace and combat systems make up the largest portions of operating margins. This is good because since the company relies heavily on contracts from the United States government, the recent increase in the U.S. military and defense budget will surely increase these specific operating margins. Knowing this, when considering the general market value and stock price trends of General Dynamics, the data shows it is a safe company to invest in. Since the opening of the company, stock prices have continued to rise as a whole, and though General Dynamics stock price is currently falling, on a post-earnings call, it is said this was due to plane deliveries that fell short of plan due to late arriving engines. Still, General Dynamics topped their quarterly expectations and plans to deliver 150 aircraft in 2025, which is an improvement from the 136 deliveries made in 2024. Even a consensus rating, which averages 20 Wall Street analysts, have said stockholders are safe to hold stocks because of a forecasted upside of 17.14%. The company currently has a backlog of $90.6 billion in future business, and General Dynamics has ample cash to continue to fund its dividend, which currently yields more than 2%, as well as to continue buying buyback shares. Like all things in life, there are pros and cons, strengths and weaknesses. One of the great strengths I see in General Dynamics is their diversified business model, as well as their sense of culture. General Dynamics has a motto of honesty, transparency, alignment, and trust. They claim this is a defining moral character that sets them apart. It is a set of values that establish a sense of family as well as serve as a constant reminder of who they are and what they do. A factor that will most positively impact General Dynamics' financial position in 3 years is their balanced business model. Their business model is divided into 4 business groups: aerospace, marine systems, combat systems, and technologies. This balance and independence give each individual aspect of the business unit the ability to stay agile and maintain an intimate understanding of customer requirements amidst a shifting economy. It will also provide the ability to effectively manage allocation of capital. As we have discussed, General Dynamics' projected financial statements are forward-looking and predict the company's successful future financial performance. Based on current trends and historical statements, General Dynamics will have a good financial position in 3 years. As seen from the past 3 years of revenue, there is an upward trend for General Dynamics Corporation. From the projected next 3 years, it is clear that the upward trend continues. The General Dynamics falling stock is due to plane deliveries that had fell short of plan due to late arriving engines. Still, General Dynamics topped quarterly expectations and plans to deliver 150 aircraft in 2024, which is 24 um, planes more than the year before. Even the consensus rating, averaging 20 Wall Street analysts, have said stockholders are safe due to stockholders because of a forecasted upside of 17.14%. The company currently has a backlog of $90.6 billion in future business, and General Dynamics has ample cash to continue to fund its dividend, which currently yields more than 2%, as well as to continue buying buyback shares. On their website, General Dynamics has a page about their ethos or things that they believe, things that are a constant reminder in their daily life of who they are and what they believe as a company. There are 4 words they use to describe themselves: honesty, transparency, alignment, and trust. The company also strives to ensure fair compensation and equal employment opportunities. This applies to God's desire for believers as we live our lives and how we conduct business deals. Proverbs 11:1 says, "A false balance is an abomination to the Lord, but a just weight is his delight." God condemns the dishonest who defraud others, and to the same degree, he has a great delight in fair and just business practices. In Leviticus 19, verses 35 and 36, God clearly commanded Moses to tell God's people to have honest scales. General Dynamics has done well to promote biblical characteristics in their operations of business by connecting with the community through volunteering, ensuring fair compensation, and being transparent with their employers and partners.